Good morning, everyone. Welcome to the next session called Talk with Leaders. We have with us Laura Catana from FASE. This is the financing agency for social entrepreneurship based in Germany. Hello, Laura. Good to have you with us.
Hello. Thank you so much for having me.
And today we will be exploring experience of FASE that is aiming at connecting investors with outstanding social enterprises. And you have this on your website that's in this nice sentence that you're working with entire universe of financing planets, meaning that with impact funds, philanthropes, public funding, ethical banks, and private investors. So you have a lot of experience in looking for a perfect match between different kind of social enterprises and investors and their needs. So this is really outstanding and amazing experience. And that's why I want to ask you, Laura, as this is the conference focused on social finance, and as we are a Microfinance Centre association of all microfinance institutions, I want to ask you, how, from your perspective, what it would take, and how MFIs could engage in financing social economy, and what that means?
Sure, thank you. Thanks so much, Nina, for the question. Maybe first of all, a quick presentation of our history so that you understand a bit why we developed as a sort of hybrid finance player, in Europe. So FASE started in 2013-2014 as a spin-off from Ashoka, Germany, Ashoka being the largest network of social entrepreneurs worldwide. And what we saw at the time was that some of the Ashoka fellows, the social entrepreneurs in our ecosystem, were developing this kind of what we called at the time and even now hybrid business models. So started maybe as a non-profit activity, but then identified an opportunity to create a revenue and therefore an enterprise that can be sustainable and therefore achieve also the impact goals and the mission of the organization. And required investment capital. It required capital that was unnecessarily philanthropic or a mix. And this is how we started to look into what are the opportunities, what are the funders that were at the time interested to take that kind of risk, that kind of unknown risk, and support, back up this kind of ventures. And this is how we arrived to work with a very diverse consortium of players, like you mentioned. So including banks sometimes, but for sure business angels, philanthropic players, foundations. Currently we have in our network also, we have about 1,500 impact investors across Europe. Some of them represent more foundations that have let's say an investment arm. Many of them right now are impact funds, so these come more from the VC space. That have an impact mission, and obviously there are some public institutions, though not in Europe, and as I said, business angels still represent, let's say, a big portion of our community as well. So to make it to the point now and tell you a bit more what I see the role that MFIs can play, I think microfinance institutions have a great wealth of experience in supporting ventures that are small. So from this point of view, there is a connection and overlap maybe with social enterprises. However, the difference that I see is that for a micro enterprise that would get microfinance, a classic microloan, the aim is mostly to support the entrepreneur to develop an entrepreneurial venture and therefore increase their livelihoods. For a social enterprise, the goal goes beyond the entrepreneur, and the mission refers to supporting the community, vulnerable groups, making an environmental or climatic change. And that means that the size of venture and the whole goals of the ventures are different. And it's very important for microfinance institutions to, first of all, take the time to understand what are these differences, how they, what are the implications in terms of the business models of these ventures. It's one thing to have a small shop, a micro enterprise that might have some sort of impact, not only on the entrepreneur, but maybe also on the small community. But the goal is really to sort of create employment for the entrepreneur. So let's say there is not necessarily a scaling goal, And for a social enterprise or an impact venture, the type that we would work with in particular, those are ventures that really aim to scale their impact because they want to, solve a social or environmental challenge. And when developing this kind of a business plan, let's say, and impact plan, often what we see is that they have sort of two arms. And one is more, let's say, philanthropic. So I'll give you an example. We are working with entrepreneurs, for example, or maybe not from Africa, but let's give an example from Europe. Frank Hoffman is an Ashoka Fellow. It's a gynecologist from Germany. He developed a solution to identify breast cancer early on by employing and, first of all, training blind women to identify with the tactile senses, let's say, the tumors early on. And this is a tested methodology with clinical research and so on that proves that this model works, is more efficient than having a regular doctor to do this checkup. For such an activity, you understand that there is the business component and there is a specific business model with insurance companies covering the costs and all of that. But there is also an educational component. Yeah, how do you educate these blind women? How do you convince them, raise awareness, and then educate them, which is a process of several months that it needs to be accredited and all of that. So here you can see a classic example of how a social enterprise, unlike a microfinance, backed venture, would potentially have this kind of two arms: a non-profit, so that might require philanthropic capital, and a more revenue-based activity that can be funded with equity, mezzanine, or debt. And coming back to the skills and the wealth of knowledge and experience of microfinance institutions, I think, learning from all these years of providing debt in the market is very important. Because you can apply many of those lessons to impact ventures. But again, putting the hat of impact, not only classic entrepreneurship, there might be some things that microfinance institutions might want to also look into. So, for example, innovating a bit or creating more flexible structures, not only larger amounts of capital on the market that would need to be provided, but creating capital that is more patient, more flexible. For example, we see a lot going on now in terms of revenue-based financing, which is also a sort of debt, going into taking more risk. So, for example, playing with mezzanine capital. This is something that we have been doing quite a lot since the beginning. Actually, we were among the first ones to do that in Europe. And also another element that is coming up more and more is playing with what we call impact-linked capital or impact-linked finance. So in particular, in the debt sector, this is, let's say, a structure that fits very well. Essentially, you create, and again, this is another thing that microfinance institutions would probably need to look into more. How do you measure impact? And then once you know how you measure impact, what kind of indicators fit certain enterprises, then you can essentially link the repayment structure. So, for example, the interest rate, or depends how you structure the repayment of that specific debt financing. And the more impact the enterprise achieves, the less interest rate it will pay. Yeah, so there is a reduction. And these are all instruments that I think are, very useful to put in place. The financing gap for social enterprises is still very wide. And now we're again in another crisis. We were just discussing yesterday with investors about this and what are the implications. There are signs that there will be, let's say, a switch in the capital flow from equity towards debt, potentially, given the change in the interest rates right now. And I think this puts even more pressure on us, the ecosystem, to actually provide the kind of debt that is needed by these ventures so that they can actually achieve the impact that they can create. I'll stop here because, you might have other questions as well.
Yeah, there are many. You have opened many interesting topics. I wonder now, before we move to the example of the European Social Innovation and Impact Fund that you, as a FASE, has launched and successfully developed. I think one of just to tell you about also the impact of the microfinance institutions. The bigger impact, not the individual one. What many of them do, it's the financial education. I think I wonder how this can be, somehow connected with what you're saying. This educational arm or angle, because this is something that definitely is present, and also there's a lot of coaching for the clients also available.
Yes.
So
Yes.
so this is something.
I think all this part is something that can be easily translatable and helpful for impact ventures. Many of these entrepreneurs, don't have necessarily the financial background to actually run successfully enterprises at scale in particular, and also to raise capital. So I think this would be very helpful to bring it in the impact venture ecosystem. What we are also observing is but I have to say maybe a bit less in Europe, even though in Eastern Europe it might be a bit more. We see it a lot in Africa. There are a lot of new impact ventures that are essentially fintechs. Yeah, and that's where I see a lot of microfinance players. I live in Luxembourg, and just a week ago there was an event of Catapult Africa. It's a program that supports fintechs in Africa, but with an impact goal. Yeah, so basically fintechs that really try to support marginalized communities to have access to the capital they need, and it can be capital for healthcare, capital for education. Like you can have very specialized fintechs. Depending on the areas of need and the SDGs that the venture tries to achieve. So I think also there, maybe an interesting idea is I see a lot of innovation indeed in Africa. And it might be actually interesting for the microfinance providers in Europe to take a look at what's happening there. It's a very, very vibrant ecosystem, and I think there is a lot we could actually learn from them.
That's very interesting. Perhaps so you mentioned the event Catapult Africa, yeah. That's I wonder where to look. Okay, this is something to
happy to, if there's anyone interested, happy to connect. It's basically a publicly funded program here in Luxembourg, and also there is this fintech organization that supports companies across Europe based here. So that could be also an interesting link when it comes to the interconnection between microfinance and the financial world more broadly, and impact ventures.
Great. Being time conscious, I really want you to share we have a slide from you, because FASE has created a fund as European Social Innovation and Impact Fund. This is the also mezzanine impact fund supported by EaSI Guarantee from EIF. So I would like you to explain how it works a little bit and share with us what you do, how you do it.
Thanks for sharing the slides.
And please let us know where to share the next one. Yes, where to go for the next one.
So basically, this is a fund that we started a few years ago, and it's quite unique. It's the first and only at the moment impact fund that provides mezzanine capital to EU impact ventures. Has a EU guarantee. And to tell you a bit why we needed this fund and why we took this sort of task of putting it out on the market to mostly inspire others, because we're not managing the fund. We created it, but we didn't want to take all the management work, because this is not what we do. But we felt the need to show to others that this is possible, and in particular to convince investors. So the reason why this is quite unique and not many others have taken this task to create such a fund is because, as you see here on the efficient frontier, let's say the risk return ratio, for a traditional VC fund to enter a space where to make investments that provide less returns, obviously you would need to have a lower degree of risk in those ventures. And impact ventures are typically considered quite risky, because impact investors sometimes do not monetize or appraise, let's say, the non-financial, the impact value that is created, because these kind of ventures are often in spaces and in markets that do not have necessarily proven business models, and everything creates more complexity. There are not enough skills and talents, many aspects that we could talk about. So this kind of perception of risk that is higher obviously would require more returns, which social entrepreneurs and impact ventures often do not want and cannot sometimes provide, because even in what we call a lockstep model, where the returns and revenues of the venture increase proportionally with the impact created, even then you might have at certain point some trade-offs when you need to make decisions to choose, what do I want more, impact or returns? And in order to create a model, a financial model that could suit impact investors, we found the opportunity of using guarantees to basically de-risk their investments, and in this way have them accept lower returns and make it a model that can be sustainable for them and interesting and useful for the entrepreneurs. Maybe we can move to the next slide to show you a bit more how that will work. So for the ESIIF, we were targeting initially a 20 million euro fund. I think, yeah, maybe this one. And to cover basically about 60 social enterprises across Europe. As I said, we initiated it, but we do not manage it. We created it in a partnership. This is another thing we really wanted to prove, that it's possible to create partnerships between players that bring different skills. So we partnered with Avesco, which is a fund manager from Germany that is currently managing the fund, and we only provide the pipeline to the fund. Let's move to the next slide to show you a bit the structuring, because this is actually what is quite interesting. So yeah, as you see, we were targeting 20 million with a tenure of 10 plus 2 years and providing mezzanine capital. The fund has 2 tranches. So basically investors could come on board and support such impact ventures invest in the fund by taking different risk and return profiles. And moving to the next slide, see a bit how this works exactly. Let's move to the next one, because I see time is rather limited and the most important part is in the next slide. So this one. So as you see, the structuring of this multi-layered fund contains, let's say, 3 buckets. On the lower side is the EaSI Guarantee that basically covers a part of the portfolio losses. And obviously this is the highest risk, like EIF, in this case, the European Investment Fund, is taking the full risk for that specific portion, and we will see next exactly how much it is. Next, there is a junior tranche that basically provides capital for investors that expect a return between 4 and 4.5% IRR after costs. Obviously, this means higher risk. And there is this subordination compared to the next tranche, the senior tranche, which is less risky. So it's the most secured tranche. And obviously this comes with lower returns of about 1.5% IRR. So this is how you could bring investors together along the return and impact, let's say, continuum. And you could bring them together in a fund and make them work in such a way that that can make sense for all the parties involved. It's very interesting, the innovation that this kind of guarantee can bring. At the fund level, it can bring also at the level of the company. You could switch the guarantees with grant capital, for example, and there are cases. For example, Big Society Capital in the UK has been pioneering and testing all sorts of models of structuring funds by combining not only guarantees and, let's say, this kind of capital, but also equity and debt and mezzanine from LPs. So I think if anyone is interested, I am happy to also provide more cases along these lines. And maybe if we move to the next slide, you can also see exactly how the guarantee works. So in a model like this one, we calculated and assumed a loss on the portfolio of about 20%. And the guarantee, the EU guarantee, has a cap, obviously, so can cover 80% of the potential losses. But if you go back to the idea of the structured, of the layers of the fund, that means that most probably the most of the capital of the senior investors, they are basically covered. So there is very limited risk there, while the other ones obviously can be covered only if there is other capital left. So I think, this is more or less about ESIIF. We closed the investment round for the fund. I think last year, if I'm not wrong, end of last year, with 13 million. It has been a very rocky experience. We started the fundraising actually for during COVID time in 2020. So we did all the fundraise virtually. And there are lots of lessons learned as well in terms of what investors declare that they want to do in terms of investing for impact and what they actually do. So I think it's very important to always have in mind that the market size is indeed very big. The latest report of Gene makes an estimation of 1 trillion, for last year, USD. But on the other hand, most of this capital is actually going towards market rate return kind of investment. So that's also important to keep in mind.
Of course, the change doesn't come that fast. Yeah, there's still. And what's the future for you and for the ESIIF?
Interesting question. Yeah, we're actually looking now into new projects, a bigger fund. But I can't say much more than that. We will definitely disclose more as things come together. But at the moment, we're in a brainstorming process. Our goal is really to test, to pioneer, to prove that different models are possible and that they are sustainable from a financial and impact point of view. So that others can pick them up and scale them. Yeah, we don't want to become the biggest fund manager or anything like that.
This is really great, and I see some questions regarding if you are available outside Europe.
We could potentially, but to be very honest with you, our network of investors is mostly European and some African. So we could potentially look into cases outside of Europe, but only if we see that we can actually bring value to the enterprise with our investor network. So it's a case-by-case decision. I can't give you a very precise answer.
Okay, so still you have this human approach. So really judging case by case, yeah, or
absolutely, yeah. We work so far with about 70 ventures, so about 15 per year, and raised about 50 million euro for them. So yeah, once again, we're not working with huge numbers, but are actually very much focused on the tailored approach, helping them, taking them by hand, and supporting them in the structuring of their deals.
Thank you very much, Laura, for sharing this. And where can we find out more about the knowledge that you have? And do you have like events where you share it? Or
actually, we just launched this year. Yeah, this year we launched an impact deal structuring course. So I can put the link here. This is an online course that you can take at your own pace, and there is also an opportunity to have some live sessions with me and Marcus, the founder of FASE. So if anyone is interested to learn more about from our experience, but also from others, because we looked in lots of experts who provide testimonials. Happy to see you there. We just finished yesterday the first cohort with 12 participants in the live format.
Thank you very much, then, and I wish you good luck in the creative work in coming up with new solutions. And great job.
Thank you so much, Nino.
Yeah. Bye.
Have a good day, everyone.